Steve, come on up. Steve Emecz from collectAI, which is an interesting joint venture under the Auto Group organization. So what we have here is we have actually a bit of it's an interesting startup, but I'll call it a middleware almost as a service sort of approach. Have a different look at what type of solutions are arising in a particular marketplace, but how they actually have a global impact and also follow global trends. We have a startup who has shared part of their journey in terms of how do we come up with an idea, where do we actually solve a problem using a new model of experience, but also all the mechanical back-end operations have actually been tweaked as well, so that expresses it differently. And then we've got someone who actually is also looking at how do we actually take the competitive advantage of a corporate and build a venture that addresses a gap in the market that may not relate to our core competency, but certainly is going to be where we find a new business model, a new revenue stream, and a new way of operating that allows us to be somewhat future-proof. So it's a startup under the JV Collective. We've got an interesting look at what FinTech has actually done, or is how it's impacted the market. And I do want to kick this off with collaborative partnerships, because everything you're doing, when you're doing as a service, is about partnership. You're looking at actually facilitating partnerships between corporates and startups. You're experiencing it firsthand. And you've got a fundamentally different hybrid model, collaborative approach, not only from the corporate backer, but to the marketplace, as you face the marketplace. So let's kick that off. How do we look now at payments, at the ecosystem that exists around payments, from the acquirers to the merchants to the banks to the end customer? How do we start looking at collaborative processes inside of the FinTech space, specifically around, let's talk merchant payment ecosystem sort of impact. Let's kick it off though.
It's more making it accessible, because sometimes the acquirers or other providers don't have an accessible API to access mobile payments. So the same way that they embedded their SDK into the ordering platform, so enabling another bridge of API on top of the acquirers' APIs to actually allow mobile developers or new ideas to come to market and actually facilitate. So you can work with multiple acquirers at the same time, not just rely on one of them, but work with several of them to initiate more payments or more payment types, for that matter, in mobile or web, for that matter.
Are you seeing that to be the general case across the industry, or do you see some different models that have also come up? Because I know why I feel the logical lies, which is that API directing traffic sort of approach, where you actually have the back end as a system that fully functional and you literally do your very niche thing on top of it. Is there a different way, or is this the most optimal way that we should actually embrace as an industry?
If you look at the accessibility that I mentioned, so imagine early stage company wants to start accepting payments online, but want to have both alternative solution on one hand, like having PPRO on the system, or on the other hand, opening up for a large amount of banks at the same time acquired, like leveraging ACI for that matter, but don't have the ability to set up the setup fees and the monthly minimums, etc. So using a consolidated API to open them up to such connectivity actually breaches that accessibility to all the payment methods.
Are you seeing that sort of expressed in the Dutch ecosystem?
No, I think in general you see that parties are really keen on cooperating, but I do think that it's good to recognize that there's a different risk approach for different sizes of parties. So especially with payments, you're talking about core infrastructure for most parties, so they generally won't let some startup just touch it, unless they're really certain that it can't hurt. So I think that's one of the barriers that there are actually to really make optimal use of all the solutions that are out there. And this is where some of the middle-sized companies or some of the integrators actually can play an important role in actually mitigating that risk and basically working together with the smaller ones to bring in the most innovative solutions actually to the market, to the big ones, but helping out, discussing, bridging basically the cultural gap, but at the same time also mitigating the risk. Because in many cases, for example, if I would be a bank and I would want to have someone to work on my payment infrastructure, I would like a guarantee from them that they will keep it up. And that guarantee will have sufficient numbers that will be out of league for most startups.
I mean, if we're looking at that in terms of reducing the risk of actually collaborating with a brand new idea that doesn't have a lot of backing, it's still very nascent, you've lived through it. So share a little bit about the experience of actually working direct with an FI.
I think one of the things that's important is that the API culture that we've got now that makes it easier to connect and easier to get those volumes in has to be coupled with the specialism. because one of the things that we found that we use reinforcement learning, so a part of machine learning, collectAI. Obviously, we use AI, and we're very, very focused on a specific application of machine learning in a particular business process and invested heavily in that. So we become a specialist in that niche. But what we're seeing now as we're starting to do even collaboration with other fintechs as well, we can connect with them and we can get the volumes, but we still keep our specialism and we still keep a real focus on what we do. And I think that one of the things I would encourage for a lot of the smaller startups that are in sort of seed stage and Series A is to really get that focus and stick to that focus, because I see quite a lot of organisations that fail, try to do too many things, and being a specialist, there's no sort of no shame in being a specialist and being the best at what you do. And I think what was really interesting about the FinTech network concept there is that I think is going to be a growing trend, and we need organisations like Holland FinTech to capture all of that and make it easier for people to find you in terms of that specialism.
Did you also see that it's actually easier to cooperate with smaller parties from an API perspective? Because you're actually probably easier, it means shorter decision cycles, but also basically more like-minded view on how you should cooperate.
It is. I mean, it's always challenging with startups because, 1 or 2 in 10 startups survive to carry on. So I think what it does allow you to do is it allows you to test fast and keep that risk relatively minimised. We're going through that process at the moment with the number of the API integrations that we've got with people that haven't succeeded, so we're now flipping those API. We've got backup plans, and that's another piece that's quite important, is to always have that kind of DR of a second
Fallback.
your fallback scenarios in terms of that side of things.
But it's also about knowing how to properly pilot and test as quickly as possible. There's that notion of addressing a problem that you have currently today, the horizon that is right there in front of you. How do we address that immediate problem? Versus thinking about how do we set ourselves up systemically to address the horizon 2 and 3, those things that are coming at us in 5 to 10 years, and being able to very quickly test, test and pilot and understand in parallel to your current systems, and validate or invalidate where that actually works, and then go back and test as often as possible. That itself is a numbers game. You can't do 1 or 2 or 3 pilots in theory a year and actually find success. You do 50, you find actual solutions that work. And the point is that as quickly as you can consume or can actually produce and consume those pilots, you actually validate the model that you're shifting for. And you can address those longer term, further out evolutionary changes you have to be in, you have to actually have the system to address in 10 years.
That's a really important point, because we make the assumption that API means speed, but it necessarily doesn't. So I wrote an article, about 6 months ago, called "You Want the API, You Can't Handle the API." It was a little gift from a few good men. That fantastic.
Jack Nicholson, yeah.
And the point there was that we have a discussion with a large organisation. The first meeting, it's always, have you got an API? Yeah, we've got a modern REST API. You can connect to it. It's all good. And then by meeting 3, it's can you handle a flat file? Because our tech team's really maxed out and we haven't got the resource to connect to your API. Fast piloting means giving the customer the choice. So we always walk into every customer and say, look, we've got 2 ways to get a really fast POC. You want to be up and running in 3 or 4 weeks, and we can go out there and we can test this technology. Here's flat file process, here's the API. And quite often people will say, okay, let's get going quick with a flat file, because we can dump that out of SAP or whatever, and then we'll move to the API, which is then gives you the real time and the more functionality that you want.
So that's exactly the approach, the reason why we built the way we built our partnership. So imagine just, for example, you have G2 here and the Web Shield. So our customers, for example, have problems integrating directly because sometimes it's overly complicated. We do one integration and offer that already as part of it. So for you to do a proof of concept with one of the startups working with us, you don't even communicate with them. We do one integration to any one of the providers out there, and then they can leverage through our layer of API, which they're already connected to through our SDKs. So we facilitate that bridge. So you don't have to even to do proof of concept with any of them. They're doing it directly to our test accounts. The second it works on a test account, you automatically have a new customer that already knows that it's going to work because we already tested it with you. So the idea of bridging those partnerships. We try to encourage as many partnerships as we can with any service provider sitting out there at the hall outside, just to give our clients, payment service providers, the ability to leverage more services out there. So using those aggregated integration partners is kind of the way to actually facilitate the fintechs to reaching market a lot quicker and a lot cheaper. To actually start, and it saves money for you too, because you don't have to deal with them in the integration process.
I think the other area of collaboration that we haven't heard mentioned really at all is around geography. So we took the decision to partner. It's in the press. I won't talk about it publicly, but it's out there. We took a decision to collaborate with another fintech that's also owned by a big corporation. So you add our two daddies together, it's about 20 billion. But we're two fintechs within those organisations, and we took that decision to collaborate with them to roll out the UK market. So, as a German organisation, we now have a big footprint and a big sales force and a big team under their brand to roll out in the UK. And I think for a lot of fintechs, one of the things that they miss that trick is that they try and go, when they do their scaling, they try and do the scaling themselves rather than looking for strategic partners. And they can be within that ecosystem. So it could be a fintech, it could be a payments organisation that can take that technology, stick their name on it, and then they don't have the risk and the development cost, they can roll it out.
Adding to, I don't know how many fintechs are here, probably not too many looking at the price of the conference and stuff. Joking. But looking from probably corporate perspective, because when we're talking on a fintech level, I 100% agree with you, I think, and coming a bit, I don't know how many of you were at the first group session here, why mass markets are not adopted, for example, these innovations. Because I think, at least from experience working with Lloyd's banking group especially, and with MasterCard a bit, it's for big corporates, be it a bank, be it a big retailer, they yet didn't learn how to do these fast cycles, how to safely innovate, how to run tests. As I mentioned, we are working, for example, on an innovation lab, even with Arsenal Lab, and you meet business people and they say, but I need this and this and this, and you say, but this is 10-week program. We want just to test with 100 of your customers, close the risk environment. If it will work, only then make these decisions, and they have 100 ideas why this has to be 3 months project at minimum. So I think one thing is what's lacking, because we are startups, or fintech startups, we can go iterate fast, and we always agile and fast. But what we are doing very wrong, we don't understand that our partners, banks, big corporates, are totally different style of minds. And what we are spending a lot of time with anyone we work is trying to explain them and help them to be as agile, quick, safe, fail fast mindset as we can. It's a hell of the job. You think why the hell you as a startup should be doing, but on the other hand, I think that proves the success, because if we would go our mindset, we would have collapsed everything. But if you go slowly and try to change bit by bit in the big organization, it works. For example, Lloyd's Banking Group has its digital innovation team that we entered the bank with, and now we are working with a real bank, the bank division. After the switch was made, they didn't have any meeting together, which for me is like, wow, the digital innovation team brought something to the bank, which is now a business as usual bank product, went through all risks assessment, you name it, you can imagine what a product manager of bank needed to make sure that this is possible. And then there's again no cooperation. So we are helping them to kind of iterate.
It's really one of the tough parts where you see that a lot of innovation departments actually are not connected to the rest of the organization, right? So they've got these enthusiastic people that want to drink coffee with everyone, and they're just so happy to actually be learning all about fintech, but it just can't do anything with it.
So this is interesting, because the question that has popped up here in relation to directly with banks, this is one of the challenges. And accelerators have served a learning environment for the last few years. So it's actually about building the capability inside the bank to understand the risk profiling of a startup, to be able to actually change their procurement process and their vendor review, and some of the risk models that they're willing to take, and how to set up a pilot environment where they can actually ring fence it so you're not touching the core customer functionality. It's been a real challenge to get banks and institutions to actually make that leap. And even though you do establish an innovation team and you put together a CVC fund, it's actually much more difficult to streamline the processes to work with smaller companies. Coming from a vendor background as well, we, in a startup environment, we used to piggyback on our partners and write on their paper in order to get across vendor management, even though we were the one solution providing it on top of an existing vendor core system that they already had. And it's that same challenge. It's really hard to go direct to banks. It's really challenging. The market now sort of in certain geographies, if we're talking about it, there have been banks that actually have adapted, and now they're looking to put in place a cadence and regular rhythm of a pilot. How do you do that? You still need some facilitation. I spent the last 2 weeks 9 bleeding hours a day sitting in co-creation sessions, which is basically a requirement for a POC between 6 different scale-ups and 3 different banking institutions. And I can tell you how bloody hard it is when you've got the innovation team actually being the gatekeepers to the business units. And the mandate for the business units to come in and validate the things that you're looking at to test. How do we run this in parallel? Where's the delta in terms of our current cost, our current conversion rate, or how many false positives we have in this particular thing? And it takes a hell of a lot of time and effort, but it requires direct access to the business units.
I think that's also aligned with your earlier remark where you said, I see that a lot of them are trying to grow independently instead of actually partnering up early. The point is actually that if they don't show any market traction, they will not be an interesting partner. So you actually just end up pitching to innovation departments instead of actually annoying the people that actually should be using your product by being in the market and talking to their customers. And so this is actually, I think, from a strategy perspective, you actually want to circumvent it and say, put something out into the market, show it works, and therefore actually create appeal with partners to actually grow further.
Absolutely agree. I think for us it was about, in the first year and a half, proving the product and the solution in the German market, getting established, getting those case studies, proving that we can lift the collection rate by 33%, reduce the cost by 41%. These KPIs proven in the German market, then you can go to a major player in another territory and say, hey guys, we've done this, we've proved it, but to scale in your territory and not have the risk that you would associate with sticking a fancy office and sales guys and whatever into a new market to go through a partner, I think that's the point at which you can scale.
Plus, I think of the budget and the cost of sale for fintechs and the runway they have on the fiscal side, right? In order to go hunting this, it's a different environment. It's challenging. I'd like to throw the time to the audience for some questions, but I also want to pick up on the use case. We saw the WoraPay use case internally for years. It was smash on. How do you actually, I would like to hear about, say, platform as a use case or as a service use cases that also exist, because I know you've got one that you referenced just very quickly in your presentation. So maybe we'll talk about the use case, and if there are questions that pop up, please make yourselves very known, and we'll make sure you have the opportunity to ask. We've got about 10 minutes left in the session, although I see one right on the front row. Can we get to the use case and we can go straight? Awesome.
One of our first clients was a company in South Africa that decided to help the unbanked community. So what they did is leverage the system, the ability to issue loyalty cards. And we actually created a closed-loop prepaid program, which they call Pay for Purpose. What happens is, let's say, for example, one of their LMOs, large membership organization, is the Nurses Union in South Africa. So they usually pay most of the salaries to the nurses in cash. And 3 weeks out of the month passes, they don't have any more money to buy food, and then there's a struggle. They go back to the employer, give me an advance, etc. So what happens, the Nurses Union are actually depositing 70% of the paychecks to an escrow account managed by FNB. The system automatically allocates the salary to a wallet account that's associated with a prepaid card, and it's accessible through a Postillion integration to Checkers and ShopRite, which has 1,000 branches throughout South Africa and Africa. Those are the biggest retailer there. And as part of the program, they even get 5% cash back on each transaction they do with a card, because for the retailer, for example, it's a cash transaction that was anonymous up until now, suddenly became a registered transaction, a known transaction, they have data on it. And for the pay for purpose part, we control how much money can be spent every week or at each one of the retailers, or even if other programs. Once the transactions come in from the switch, we identify the card, we identify the user, what's the limitation, what is the type of industry he's allowed to pay at, or a specific merchant if he's allowed or not. And then as a result, approve the transaction, the system automatically handles the settlements, and the wire transfer to settle to checkers the next day for all transactions that happen throughout the branches. It doesn't really matter. So they took a backend that was already complete with a prepaid program, but actually leverage on top was creating their own pay-for-purpose mechanism, which those are their modules. They registered the BIN, which is 97121040 in South Africa, and then every switch in South Africa is familiar with that BIN. So whenever you swipe a card, one of the Yomani cards, at one of the retailers, it automatically routes the transaction to the system instead of doing another button for the cashier on the register itself, telling her, oh no, this is a Yo card, I have to press this, to press that. We didn't need to educate the cashiers at all. For them, it's just swiping a card and the transaction will run through that process.
So I think what's interesting, and we'll go to the question in a second, is if we draw on what was discussed earlier and some adapting behaviors and customer adoption and bank adoption, how do we run something in parallel as a pilot program to a legacy system or an understanding that already exists versus fundamentally changing the behavioral patterns and running that test in parallel and finding where you actually see not only the delta in improvement, but the delta in efficiencies and possible revenue and the shared revenue across different systems. This is what FinTech actually does, and this is why it becomes a really interesting place to play, because there's so many use cases that address a very, very specific niche problem, as you addressed, Steve, that it's infinitely possible to change myriad facets to this crazy thing we call a payments value chain, let alone how it maps into every other business unit at a particular financial institution and their end customers, be it merchants or SMEs. Let's go to the one question in the front. Please state your name, where you're from, and then ask away.
My name's Anish McIntosh. I'm editor of Card and Payments World. I'm going to ask probably what's a bit of a simple question, but I haven't got to the answer of it yet, so I'm going to do it anyway. So, I mean, you've been talking about how existing players are sort of acting as restrictive gatekeepers, if you like, and keeping out the new players or making it difficult, making it cumbersome. So is PSD2 going to make it easier for fintechs? I mean, that's the whole point, isn't it, to enter in? Or do you feel that the restrictions are still going to be there and that, the existing players will still have the power to suppress what you want to do?
So I'm going to reframe that question slightly.
Okay. Don't make it complicated, then,
No.
I won't understand.
No. Regulation actually enforce players change their behavior, i.e. the current incumbents, based on risk exposure, technology, and it actually push them to innovate. And when they don't want to change it, what's the imperative? What's the incentive for an institution that actually has systemic risk impact? And anything that they do actually has an impact in the rest of the market.
Prefer my question.
Yeah, I go for the regulator. Well, let's turn it over. What's the incentive for banks to actually change and adopt fintech then?
I think PSD2 is a double-edged sword because it has a lot of requirements to it, which is tough for a fintech to address, and there's high costs, therefore it's easier for the bigger institutions, but also is a disruptor. And when you have this disruptor into the market, which is a change of legislation or a change of consumer behaviour, whatever, it creates opportunity.
But then look at the FCA sandbox and the ability to actually do these models and tests and look at the impact from a regulated, with the regulator at hand. Vaidas.
But PSD2 is a classic because if you look at the different even reactions of the banks, some of the banks are just releasing the very minimum of the API, so they're treating it as a requirement that they have to.
The 9 RTSs
they have to do it.
Yeah.
Then I think there was an event a few weeks ago. They were saying one of the British banks has launched over 50 APIs already against PSD2, loads of different flavours. They're seeing it as a business opportunity to innovate, make it available so that a lot of fintechs can integrate with them and get involved with them, whereas some of the institutions are still seeing. I think it's a driven from the very top of a financial institution in terms of that mindset. Do they see something like PSD2 as a restrictive pain that they're going to have to do something about, or do they see it as an opportunity to, things are changing, so let's change with it?
Answering that question, I would argue per se, if like banks or big institutions really want to protect the market for that reason, from my experience, they just don't know how to innovate that fast. And actually this regulation, be it forced, it helps new fintechs rise and 9 of them die. One maybe will stay, but what happens then, it forces these companies to learn to innovate, which means open APIs, which means to partner, which means to kind of create this ecosystem as we talk here. So I don't see it as, if you look at direct cause and effect, that regulation or PSD2 forced banks now to partner, but it's more like this forcing created more running rabbits around, which now you cannot kind of totally ignore. And like new challenger banks coming up, new startups starting to steal little bit of piece of idea. Like I was talking with MasterCard and I asked, all these new banks and new MasterCard cards that I issue through those, are those a big part of your MasterCard? Said, we don't see them on totals at all. There is not even a line there because it is so minority. While if you talk to Atom or any other, they will shout that they have thousands and sometimes millions of the cards issued. So I think there is totally different game size, but I truly for, and I'm really happy that PSD2 open banking is out because it just puts that momentum needed to learn how to make the change.
I think that game size is absolutely correct because fintechs aren't disruptors coming in. That they're small and they're coming into the market. I think the biggest issues are more worried about the GAFA, right? So Google, Apple, Facebook, Amazon. These are the game-changing guys that, as and when they decide to step into this space, they own the customer relationship right at the front end. They already have that customer touch. So does the bank and financial institution suddenly become pushed back in the value chain into the background? Because the
GAFA is ultimately going to be regulated if they choose to step in, and that becomes a lot more troublesome for certain of those organizations. I think specifically of Google and the privacy mechanisms. So they're going to be exposed. I don't actually see them having the appetite to be licensed in Europe specifically for financial services. They will push the boundaries of what we do, and they will certainly push it in terms of how we play in the e-commerce space with the financial institutions. So there'll be market pressure from them, but in terms of actual risk and liability and the licensing, I think that's going to be a bit of, it's going to wait a while, but they'll play on the fringes.
But they're acquiring. So if you look at the lists of fintechs that GAFA are acquiring, that's fascinating and that's accelerating. So if you look at the last 2 or 3 years, the number of fintechs that have been gobbled up by GAFA are fascinating. And I think you're right, they won't license themselves at the high level. But I think they'll start to acquire into
If we look at Ant Financial and we look at WeChat and WePay, then we're verging on that particular model. So looking to the east rather than to what we think of the sister relationship between the west sides. I think we actually need to look at emerging markets, understand where the pressure is going to be coming, especially in terms of bank ability to collaborate or how the financial institutions actually engage across the entire ecosystem with fintech that have niche specialities but augment, and at the very end of the day, the entire customer experience, and also has a fundamental impact on the security and safety and ability to transact.
But just to add, because we're on merchant and payments conference, not on a fintech conference, so looking from retailer or merchant perspective, right, that's, I think, the reason, or at least we find the reason why Tony Nash, kind of managing director of Lloyd's Banking Group, or why Lloyd's Banking Group and MasterCard tries to innovate with companies like us, because they want to provide new types of experiences because they know that Googles and Amazons are coming and they will want that connection, right? So of course we can wait until those guys will come and kind of partner with them, because they will need infrastructure to connect to retailer, the same they need already POS machines for Apple Pay and WoraPay to work, right? So, but I think already, and I would argue your statement that schemes will be gone. I think they innovated quite nicely and understand that plastic is history in the museum, so they're looking for new ways to provide new payment methods, these ways to exchange the transaction, and being embedded in retail experiences that I kind of was talking about. Which I'm really passionate about, that we find a way, with 2 biggest organizations to help them to innovate on this case.
So I'm going to wrap it up because we are at this point, but it's interesting because we all have a different version of a crystal ball and what the market looks like.
Just want to add one thing, because I think one thing in the question might be a bit confusing. That's actually, fintech is not a type of company.
Exactly.
So it's just good to imagine that around PSD2 there's all kinds of rules to be fulfilled. And we can call them all fintech, but it doesn't really help us to identify what they're doing and what the impact of this regulation might be for them.
Absolutely.
It's just good to keep that in mind.
And actually, we're moving more from a B2C very much to a B2B, which is right now currently focused on how do we enforce the compliance mechanisms and the workflow, the risk models, and attack all of that from a regulatory perspective. So it's not so much the end game, it's the back end game. The back end game. Anyway, I want to thank...
Back to the ass.
There's been a lot of ass on the stage today. Eliad, Don, Vaidas, and Steve, thank you very much for this. And let me remind you, audience, it's a tweet storm. It's supposed to be a tweet storm. Please actually share your thoughts. Continue the conversation online and connect with others that have actually challenged your views. And I think that's one of the most valuable things we have at a conference is actually connecting with those. Invite us to think differently. So please do that. The hashtag, of course, is MPE ecosystem or I love MPE. Too bad they don't have the heart emoji. But let me invite you back into this room. We will have opened up. We actually have the innovation competition starting at 1:20. In the meantime, I invite you to enjoy yourselves at lunch. But please come back for the competition in this room, and we'll kick off a very interesting afternoon of more FinTech in a very different sort of way. And please remember that we'll also be gathering tonight at 8 p.m. for a gala dinner, thanks to Discover. We really appreciate the sponsorship there, but please continue to join us, continue to be social, and continue to challenge yourselves. Thank you very much.